A very good day, sir. This is Reshmi
And Rishab.
talking about the interest rate risk of ING Reshmi Bank. First, let us understand what the interest rate risk is. The risk that an investment's value will change due to a change in the absolute level of interest rate in the spread between two rates in the shape of a yield curve or in any other interest rate relationship. Such changes usually affect security inversely and will be reduced by diversification. Now let's see what's the effect of interest rate risk on the bonds. Interest rate risk affects the value of bonds more directly than stocks, and it's major risk to all bondholders. As interest rate rises, bond price falls and vice versa. The rationale is that as interest rate increases, the opportunity cost of holding a bond decreases, since investors are able to realize greater yields by switching to other investments that reflect the higher interest rates. Now, interest rate risk, that is IRR, in the banking books of ING Russia. Changes in interest rate affects a bank's earning by changing its net interest income and the level of other interest sensitive income and operating expenses. For the purpose of monitoring and management, interest rate risk is separated into four sources, which is repricing risk, yield curve risk, basis risk, and optionality. Identification, measurement, mitigation, monitoring, and governance of IRR are prescribed in and followed as per the directions of the market risk measurement policy and the investment policy. The IRR measurement and reporting is performed on monthly frequency to ALCO and quarterly to board. Interest rate risk arising due to repricing of those assets and liabilities which do not have a maturity date, for example CASA, that is current account savings account, is managed by distributing these assets into various maturity buckets based on an approved replication model. Market risk manages the interest rate risk of the banking books by proactively and periodically employing the tools. Managing and monitoring the interest rate risk exposure arising out of normal business activity is executed within the following risk limits or framework: mismatch per bucket, cumulative or non-normal gap limits, earning at risk limit, value at risk limit for the asset liability management book, and fractional value at risk limit for the capital books, event risk limit, and duration mismatch. Now let's see how interest rate risk is managed in ING Russia Bank, and which would be continued by Rishab.
Thank you, Rashmi. Now I'm talking about the managing interest rate risk. They are in a two type, and as per the two level of the structure and the mismatch interest rate risk of the ING Russia, they are managed and monitored from the two perspective. First is an economic value perspective, and the second is an earning perspective. Now we are talking about the economic value perspective. It tells about the analysis which impact the change in the interest rate by the cash flow of the asset minus the expected cash outflow of the liability plus the net cash flow of the off-balance sheet items, which are not there in the balance sheet items, which are not there, they are not mentioned exactly. And the second one is the earning perspective, which involves the analysis of impact of changing the interest rate which are incurred or reported earning in the following year. The bank monitors the earning at risk with respect to the net interest income, with the base value is 100 basic point. It can be changed according to the level of the interest rate. This is measured by net interest income and the net interest margin. These two perspectives are combined in the methodology to analyze their effects simultaneously. You can see now the earning impact perspective, they are mentioned in the curves as per 31st March 2021. The earning at risk, that is basic point is 100 parallel to the first year, you can see the total it is minus 20.97 in rupees. And if we talk about the rupees, it was generated just minus 26.56, and in the euro it was plus 0.01, and USD it was 0.11, and it was sterling it was just a zero, and it was Japanese yen it was just a zero. Second is comes earning at the risk, that is the basic point, is 100 parallel to the second year. The total it was minus 23.12, and as Indian it was in rupees minus 24.13, and euro it was just a zero, and USD dollar it was 0.02, and yen yen it was sterling it was just a zero, and the Japanese yen it was just a zero. And if we again see that for the third year, it was total it was in rupees it was minus 32.01. For Indian rupees it was minus 32.7, and for the euro it was zero. For the USD dollar it was 0.01, and for the rest, for the sterling and for the Japanese yen it was just a zero. Now, if we see for the economic value perspective, we will see that the NAV impact for the 50 basic point was, the total was minus 85.45. As for the rupees it was minus 86.89. For the euro it was 0.28. USD it was 1.05, and on it sterling it was 0.11, and Japanese yen it was just a zero. And if we come to see for the 100 basic point, it was minus 170.90 for as a total, and for the rupees it was minus 173.78. Euro it was 0.56, USD it was 2.10, and for sterling it was 0.22, and for the Japanese yen it was just a zero. So these are the measures for that. And it was thanks a lot. It was all about the ING Russia interest rates. Thanks a lot. Thank you.